Hello traders, welcome back to the channel. Today, we're diving deep into the gold market, Xauusd. Before we get into the nitty-gritty, let me start with a quick story that I think you'll find fascinating. Gold has been a symbol of wealth and power for thousands of years. In ancient Egypt, it was seen as the skin of gods and was used in religious ceremonies. Fast forward to the 20th century, and gold was central to the global financial system, with many countries tying their currencies to gold in what was known as the gold standard. Even though that system has been abandoned, gold hasn't lost its shine. In fact, during times of crisis, whether it's wars, economic downturns, or political instability, gold often becomes the go-to asset for investors looking to preserve their wealth. Now, in today's ever-changing market, gold remains just as critical. The current market situation presents some intriguing opportunities, especially if you know what to look for. In this video, we're going to break down the current price levels, potential trade setups, and the key zones you need to be aware of. But before we dive in, make sure you subscribe to the channel, hit the like button, and share this video with your fellow traders. And don't forget to join our Telegram channel where I share free trading signals and market insights. The link is in the description below. Alright, let's get started. Let's start by setting the scene. As of now, Xauusd is trading around the 2,516 mark. This level isn't just a random number, it's a key pivot point in the market, and here's why. If we look at gold's historical performance over the past few months, we can see that it has been in a tight range, with several attempts to break above the 2520 to 2525 zone. This resistance area has proven to be a formidable barrier, rejecting multiple attempts to move higher. However, with the current geopolitical tensions and economic uncertainties, we could be on the brink of a significant breakout. But it's not just about resistance. On the downside, we have a series of support levels that have kept the price from plummeting further. The immediate support is between 24.99 and 25.04. Below that, we have the last cluster support at 24.90 to 24.94, which has been tested multiple times in the past and has held up quite well. If this support breaks, we could see the price drop significantly to the swing area around 24.60 to 24.65. What's fascinating about gold is that these levels aren't just technical, they're psychological. Traders around the world are watching these zones closely, and their actions will likely determine the next big move in the market. So, if you're trading gold, you need to be aware of these levels and plan your trades accordingly. Let's zoom in on the charts and break down these key levels in more detail. Immediate resistance, 2520 to 2525. This is the first level to watch if you're considering a long position. If the price stays around the 2516 zone, this resistance could be the gateway to higher levels. But it's not just about breaking through 2525, what happens after that is crucial. If the market can sustain a break above this level, we could see a rally towards our next target zone, which I'll discuss in a minute. Immediate support, 24.99 to 25.04. This level is our first line of defense if the price starts to drop. It's a zone where we've seen buyers step in before, providing a cushion for the price. If you're long from higher levels, this is where you might consider setting your stop losses. Last cluster support, 24.90 to 24.94. Now, this is where things get interesting. The last cluster support around 24.90 to 24.94 is like the market's last stand before a potential bigger drop. If the price breaks this level, it could trigger a cascade of selling, pushing the price down to our swing area between 24.60 to 24.65. If you're a conservative trader, you might want to wait for a break of this level before considering short positions. Potential resistance, 25.45 to 25.50. On the upside, if the price breaks above 25.25, the next potential resistance is between 25.45 to 25.50. This zone hasn't been tested in a while, which makes it a prime target for bulls. If the market has the momentum to reach this level, we could be looking at a new wave of buying interest, potentially pushing gold to new highs. Now, I know this might sound complex, but it's all about understanding the flow of the market. These levels are where buyers and sellers are likely to clash, creating the volatility that traders thrive on. Now that we've mapped out the key levels, let's talk about how you can turn this information into actionable trade ideas. Scenario 1, rejection from 25.20 to 25.25. If the price tries to break above 25.20 to 25.25 but gets rejected, it could quickly drop back to the 2500 to 2505 area. This zone has been a reliable support in the past, and if it holds again, it could offer a great buying opportunity. Here's how you could play it. Set a buy order around 2505, with a stop loss just below 2499 to manage your risk. Your first target could be the 25.20 to 25.25 area again, giving you a nice risk-to-reward ratio. Scenario 2, break below 24.90 to 24.94. If the price breaks below the last cluster support at 24.90 to 24.94, it could signal a deeper correction, possibly down to the swing area between 24.60 to 24.65. If you're more aggressive, you could consider shorting the market once 24.90 is broken, with a target around 24.65. However, make sure to monitor the price action closely. If the market shows signs of reversal before reaching 24.60, you might want to exit early and protect your profits. Scenario 3, break above 25.25. On the bullish side, if the price manages to break and sustain above 25.25, the next target would be the 25.45 to 25.50 resistance. You could either hold your long position or consider adding to it as the market moves higher. Just remember, the closer the price gets to 2,550, the more likely we are to see profit taking, so consider scaling out some of your position as we approach this level. No matter which scenario plays out, always keep an eye on the broader market context. Gold doesn't move in a vacuum. It's heavily influenced by external factors like geopolitical events and the economic calendar. For instance, if there's a major news event that impacts the global economy, you might see gold spike or drop rapidly, so always be prepared. As we wrap up, let's quickly recap the key points. The current market price of gold is around 2,516, and we've identified critical resistance at 25.20 to 25.25 and support at 24.99 to 25.04, with deeper levels to watch at 24.90 to 24.94 and 24.60 to 24.65. Depending on how the market reacts at these levels, we could see some significant moves in either direction. Remember, trading is not about predicting the market but reacting to it. Keep your emotions in check, manage your risk, and always have a plan before entering a trade. If you found this analysis helpful, make sure to subscribe to the channel, like this video, and share it with your trading community. And don't forget to join our Telegram channel where I share real-time signals and insights. The link is in the description below. Finally, just a quick disclaimer, trading involves significant risk, and it's not suitable for everyone. The content in this video is for educational purposes only and should not be considered financial advice. Always do your own research before making any trading decisions.